Hello everyone, welcome to the Ichimoku.co daily FX market review for the trading day ending Wednesday, April 13th. Firstly to the Euro US dollar, and a sign of strength from the sellers for today's trading. A very solid black body candle. Previously we saw the market rallying off the 111.60 support, breaching up through the previous strong resistance area at 113.18, and then finding resistance whilst trading within this congestion area for the last 2 weeks around 114.59. A lot of that trading within the area had been very small body candles with large shadow on the tops and bottoms, reflecting a lot of indecision in the market. And the important thing here was, with the trend being up, there was certainly a distinct lack of strength from the sellers. They were unable to retrace this uptrend that the market had been in prior to this congestion. Well, they've certainly retraced it today, and they've done it with a vengeance. They've built very solid downside momentum by forming a very large black body, and this is one of the largest black bodies that we've seen for quite some time. The sellers have taken control of the market as well and closed in a very bearish manner down through this previous support area. It had an opportunity to provide, previous resistance area had an opportunity to provide support, and it's been taken out in a major way. This is something of an extreme candle, and one would suggest with the solid momentum to the downside that we could see continued strong follow through. That is a possibility, but we do tend to see the market relax a little after we see these extreme days, very large range days with a lot of volatility. We just need to watch how the market reacts early in the session. At the moment, we are seeing a continuation of the trend by just taking out that low. There is a possibility of the market certainly extending down to about the 111.60 region, but down through there we have the Kijun-sen indicator, and there's a possibility of that holding as very strong support. In terms of Ichimoku, we now have a bearish market in the short-term time frame by trading down below that Tenkan-sen indicator. And this suggests that if we do see the market attempt to retrace and trace up through the 113.18 level, we may now see that area hold a strong resistance at 113.64. Interestingly, the Kijun-sen is pointing flat, and there is now an opportunity for the market to trade back towards that equilibrium as suggested by that flat Kijun-sen. But as I've mentioned, it may not do all of it in one day's trading. We could see that develop over the next few days. In terms of the longer term time frame trend, still a bull market by trading above the cloud, and the market was looking a little overextended up around this area, so any pullback that we're seeing here is probably quite strong for the longer term prospects at the moment of the Euro US dollar on the daily charts. Now, importantly, looking at our band chart here, and previously whilst we were trading up above the upper band and the upper band was holding as very strong support, we've seen all of that sentiment change in this one candle. The market is now trading within the band, so suggesting that that strong bullish tone is no longer in the market, and also taking out the middle of the bands suggests that there now is some weakness to the market. Prospect of the market trading down to the lower band is quite decent. It trades at 112.21, but may provide very strong support if we do trade down to there over the next day or two. And just looking at the hourly chart with the Euro US dollar, and here previously over the last week or two, the market was trading down below the Ichimoku cloud, then above, and it was doing this consistently. And for today's trading over, we can see how the sentiment in the market has changed, where we've traded down below each of the Ichimoku indicators for the majority of the trading day. The Tenkan-sen has been holding as resistance as the market's attempted to rally, and that signifies a very negative market, a strongly negative market in the short-term time frame, but also overall. In terms of the depth of price action away from the Ichimoku cloud, we are looking a little overextended. So at the moment we are seeing some selling in this hourly candle. We could see the market test down to the first pivot point support level, 112.32. Certainly could test down to the second around 111.90. I doubt we will be testing to the third. It is rather extreme. But I suggest that if we do test down to either of these levels, we may see the market retrace and attempt to find equilibrium just because we're looking overextended in the depth away from the Ichimoku cloud. Obviously, as we move into the latter part of the session, the cloud does move lower and may relieve that pressure for the market to retrace. If we do retrace now, we may find some strong resistance once again at the Tenkan-sen 112.76, but also testing through there could see the market trade to the middle pivot point level around 113.10, which may hold as resistance, as may the Kijun-sen just above there around 113.26. Moving next to the US dollar Japanese yen, and very solid buying continuing in this market today, an even larger white body candle than the previous day's trading. If we recall previously, we were watching this doji candle. It set the market up quite nicely for a potential change of trend to the upside. It suggested that all of that weakness in the market, all of that selling and that commitment from the sellers had evaporated, and the market had become indecisive, and the buyers returned back into the market, changing the trend, and some good strong follow through has seen the buyers continue with some solid commitment. Now, they may find it tough to breach through this 109.42 level. It has been in a previous support level in the immediate past and prior to this, and at the moment we are just testing around there. If we do continue trading up through, or do trade through there and continue to higher levels, we may find the Tenkan-sen at roughly about 109.70 holding as resistance. It trades at 109.71 at the moment, and that may provide some strong resistance for this market. We could see the sellers return, and that would be in line with the market being bearish in the longer term, medium and fast term timeframes, and supported by the Chica span. If we do see that, watching support at 108.24 and once again down around 107.40. Importantly with the bands, and the bands are very interesting. So where we had the previous squeeze going on and the bearish breakout, strong bearish follow through, the bands have become wide, and it suggests that a lot of this trending activity has it's looking a little overextended, and the retracement now is testing around that lower band. For the market, the candle that has just closed, we found resistance at that lower band. A good test of how strong or weak in negative terms the market is how we react now. And at the moment we are trading within the band and finding support at the lower band, so suggesting we could see more upside. But if we do close within the bands, it will suggest that this very strong negative tone to the market we had previously has ended, and a possibility of the market testing to the middle of the bands around 110.99.